Ladies and gentlemen, welcome back to another video. I'm your host, the Dividend Aristocrat, and today we're going to be talking about 3 of my top stocks and how they've doubled since I've purchased them. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. With that being said, let's take a quick look at my portfolio dashboard, and then we'll jump into my holdings. In total, I've invested $29,127, and like I said before, this number has not changed in quite some time. My portfolio value is currently sitting at $40,473, so this is in fact a new milestone for me. I've never broken that $40,000 mark, and we have in fact done it very recently with an unrealized gain of $11,346. That gives me a total return of 38.95%, which is the highest we've seen yet on the channel, which is absolutely absurd. And today alone, I'm up 1%, which is $410 worth of, unrealized gains. Now, I know I don't need to clarify, but I always feel the need to. This unrealized gain that we see here and this total return might not be forever. I would love for my portfolio to never drop down from here, but there's a good chance it will drop down in the coming weeks. But if it doesn't, of course, I'll be very happy about that. And speaking of milestones, there is yet another milestone to cover on this video. I've finally broken that $1,000 mark for my dividend earned for this portfolio. Now, I've been chasing down this goal for quite some time, and I'm very happy to break it. And of course, it's only going to compound and grow faster from here, which is amazing, especially with my $714.59 worth of yearly income that I'm projecting going forward. My portfolio yield sits at a nice and pretty low 1.77%, which is where I like to have it. I don't like too high of yielding positions, aside from maybe one of my positions, All True Group, which I enjoy holding, but the rest of them I prefer to have on the lower end, and my yield on cost is 2.45%, and that's just because of the price appreciation has outpaced my dividend increases. Now, if you guys do want to see a more detailed look at my entire portfolio, I'll pin a video right here where I talk about my dividends from last month, and that'll give you a better idea of the rest of my holdings within my portfolio. For this video, I do want to jump right into my holdings section so we can take a look at that right now. So without any further delay, the 3 stocks I want to talk about today are Microsoft, Google, and Amazon. We'll take a look at some of their financials and their growth metrics in just a little bit. So the way I'm going to go through it today is I'm going to take a look at them from top to bottom, starting at Microsoft and working my way towards Amazon. And we'll look at my holdings first in order to see, what composition they make. And then we'll jump over to look at that same position on Seeking Alpha to get an idea of its growth metrics, its dividends, and any other sort of charting that we want to take a look at. So starting off with Microsoft, my average price paid for this position is $231.78, and the current price each share is sitting at is $466.25, which is a pretty absurd increase. In total, I have purchased 4 shares quite a while back, and with dividends being reinvested, I currently own 4.06 shares, so those dividends are very small. I think the dividend yield is sitting around 0.7%, so of course it doesn't compound too quickly. Now, in terms of how much I invested when I first bought this position, I put in $927.11 worth of my own money, and the current value is sitting at $892.92. At the time, this was a pretty big position for me. It was a pretty big buy. I think it was worth about 6% of my portfolio, but if we look at my allocation right now, it's only worth about 4.7%. So of course, I bought a lot more bigger positions in the meantime, like United Health and Texas Instruments, who have been taking up that top spot on my portfolio. Now, if I do have the opportunity to buy any more of these shares at a discount, I will 100% jump on the opportunity. But since I originally bought them, I have not seen many good buying opportunities, or not as good, of course, as when I bought them before. So only time will tell. And of course, at some point, I might add on more to these positions. But in the meantime, I've been working on building different positions within my portfolio. In terms of gains, my unrealized gain is sitting at $965 for this position, with a percent change or percent gain of 104.18%, which is very good for me. And of course, it is the number 1 position in my portfolio. The dividend for this position is not too significant at $20.02, and going forward, I'm expecting to get paid $12.18 each year. So jumping into my order history real quick, I just want to show you guys when I did purchase my Microsoft shares. I want to be fully transparent with everybody, and I wanted to get an idea of how I picked up these shares in the first place. So starting off in September of 2022, I bought 1 share of Microsoft at $245.94 per share. And you can see I took my time kind of building up this position. We waited all the way till October to buy my next share at $236 per share. And then following that, I picked up 1 more share towards the end of October for $227 per share. And before I ended my streak with Microsoft, I bought 1 more on November 3rd for the cheapest price out of all of them, $217.99 per share. And I really wish I would have bought like 2 or 3 towards the end there, or maybe purchased more as the price was going down rather than purchasing one at a time. But like I said before, this was a pretty big purchase for me back in the day. When we jump into Seeking Alpha, I'll keep these dates in mind so I can show you on the graph where I purchased it exactly. So taking a look at Seeking Alpha, we can see that year to date, it's up 24%, which is crazy. In the past 1 year, it's up 40.51%. And in the past 5 years, it's up 238%. If you remember before, I talked about November of 2022 is when I purchased my final share of this company. So you can see how it dipped down from its highs in 2021 of about $336 per share. And when I was purchasing it, it was closer to October to November, $225, and then all the way down to $217 per share, which is when I purchased my final share of this company. Since then, the price has absolutely skyrocketed, and of course, a lot of this is due to the AI craze. Microsoft has been benefiting greatly from this new momentum and this new trend, and I hope that it continues into the future, but we'll see if there'll be any price corrections, in the coming months or years. In the past 10 years, they're at 943% gain, and of course, as we'd expect, they're right at their 52-week high, which makes sense with a price-to-earnings ratio of about 38. Taking a look at their dividend scorecard, we can see that they have 19 years of consecutive dividend growth, so about 6 more years will make them a dividend aristocrat, which I'm very excited about, and I'm sure they're going to hit, unless of course there's any big hiccups in their business. Their 5-year growth rate for their dividend is 10.23%, and seeing double-digit growth rate for such a large company, basically the largest company in the world right now, is absolutely amazing, and they still have a payout ratio of under 25%, so I think they have a ton of room to keep growing this dividend, especially as earnings start to slow down as the company continues to mature. If you guys are looking for higher yielding positions, this might not be the company for you with a 0.65% dividend yield, but for me, this is just right. What I mainly look for is total return, companies that can provide me a very large amount of total return, and of course, I like dividends as a benefit of owning stock. With my current time frame, I don't care as much how much they are paying currently in dividends, as long as I can make those gains and then of course reinvest it in the future into higher dividend yielding stocks when I actually need the income from dividends. Taking a look at their price to earnings ratio, we can see that it's sitting at 39.79 for the trailing 12 months. And then for the forward looking price to earnings ratio, it's still sitting at 38.82. So it's trading at a very high premium, and it's a little bit high for my liking. I prefer, of course, buying it at closer to a 30, maybe even lower, 26 or 27 price to earnings ratio. So I'm probably going to be holding off on buying any more shares right now. Taking a look at their growth metrics, their year-over-year revenue growth was fantastic, sitting at 14%. And if we look forward, they're expected to grow at about 12% in revenue going forward, which is pretty good itself. If we look at their 5-year average, it's actually right in line for their year-over-year growth, and their forward-looking growth is a little bit down, but still at 12%, I can't complain too much, though I wish that their valuation was just a little bit more reasonable. The last thing I want to take a look at with this company is their profitability, and because they're a software company, we can expect this to be pretty high, sitting at 70% gross profit margins, which is fantastic. Next up, we have Google. I paid an average of $95.21 per share, and the stock did dip down much lower than this actually at that time, and I wish I would have bought more, as will be the trend with all these companies today. The current price is sitting at $191 per share, which of course is doubled of what I purchased it, and in total I purchased 6 shares of this company, and I have 6.007 with the newly instated dividend, which is very exciting. I invested a total of $571 for this position, and my current value sits at $1,148, which gives me an unrealized gain of $577 or a 101% total return on this company. So far, I have earned $1.20 worth of dividends, and they do pay now a quarterly dividend at 20 cents per share. If you all did notice, Meta did announce their new dividend first, and then Google followed that pretty quickly. So comment down below and let me know what your guys' thoughts are. Did Google copy Meta, or did they each independently come up with their own dividend idea and it just happened to be on the same year? My annual payout looking forward is actually not accurate. It should be $1.20 per quarter, so I'm probably looking at $4.80 per year. And my allocation for this position is 2.8%, which is not bad at all. I wish it would at least have hit 3%, but that is totally okay. Jumping back into my order history, you can see my first purchase for Google was on the 15th of September. So right around the same time, or actually the exact same day as that first purchase of Microsoft. And that was for a total order of $102 for 1 share of the company. Then just like before, I took my sweet time before I decided to buy another share on the 7th of October for $98 per share. And then after that, I quickly bought one more share, $97.50 on the 10th of October. And towards the end of the month, same day I was buying Microsoft, I bought 2 more shares and $93.55. So I like that I increased the amount I was buying here, but I really could have gone a little bit more heavily. But it was limited because of the amount of capital I had on the side at that time, and I didn't want to go too heavily into non-dividend paying companies. Then finally, on the 3rd of November, you can see at what a discount I bought this company, $85 per share, but I only bought 1 share, which is totally okay, but I really wish I would have bought some more and just pulled the trigger. Now, taking a look at Google's performance, we can see it's currently sitting at $192 per share, which is right at its 52-week high, and year to date, it's up 36.71%, which might be the highest out of all these companies. We'll see what happens with Amazon. Now in the past year, it's up 64.85%. In the past 5 years, it's up 237%, which is amazing. Now, if you guys remember, it's going to be the same time frame. We can see here that in October of 2022, as it was dipping down, is when I started purchasing it, and I kept purchasing it here and there until November of 2022. But if I would have waited till December, I would have gotten an even bigger discount on the company. And since then, the company has just skyrocketed up. And if it does dip down very significantly, I'm definitely going to take the opportunity to buy more shares of Google, especially now that they're paying a dividend. In the past 10 years, they're up 540%. And I look forward to seeing how they perform over the next 10-year time frame. I'll definitely be holding them for as long as I can. Looking at their newly initiated dividend, there's not much to see. 0 years of dividend growth, 20 cents for their annual payout, and 0.11% dividend yield. So not too impressive right now, but I want to see if they're going to be growing that dividend or keeping it steady going forward. Now, looking at their valuation metrics, we can see their price to earnings ratio is at 29.21, which is much lower than Microsoft. And looking forward, it's going to be 25.21, which is actually trading very similarly to the broader market or the S&P 500. Now, based on that, some people might consider this still a good buying opportunity to buy more of the company before the price goes up even further. Just depends where you see this stock trading towards in the near, couple months to a year. Based on the trailing 12 months price to earnings ratio, it is trading a little bit rich, but if you look at their forward-looking price to earnings ratio, it's actually at a slight discount compared to their 5-year average. In terms of growth, they're very solid, always hitting double-digit growth. We got year-over-year revenue growth at 11.78%, and their forward-looking revenue growth at 10.87%, which is actually a discount, or not discount, it's actually a decrease compared to their 5-year average growth rate, but I still think this is very solid growth for the company. And just like Microsoft, their profit margins are very nice and high, 57.47% for their gross profit margin, which is great. And now for the last holding I want to cover in this video, we do have Amazon. If you guys are still watching this video and haven't yet left a like, please do so. It helps me out a ton. And comment down below which holding of yours is the best in terms of total return. I'd love to know. My average price paid for each share was $99.78, and I do believe I purchased actually all 3 shares together at the same time, but we'll take a look at that in a second. And the current price is sitting at right under $200. In total, I purchased 3 shares, and with DRIP, it's still 3 shares because they don't pay a dividend, unfortunately, just yet. I invested $300 into the company, and the current price is sitting at right under $600, which gives me an unrealized gain of $300 or 100% total return. Now, of course, there are no dividend stats. My allocation is sitting at 1.5%, which is a little bit smaller than what I would like. I definitely prefer my holdings or my core holdings to be at least 2% of my portfolio. If we jump into my order history, we can see that on the 20th of October, I did buy 3 shares of Amazon for $99.78 per share, or a total order of $299.34. Looking at Seeking Alpha, we can see that the year-to-date return is sitting at 31.49%, the 1-year return is sitting at 57.15%, and the 5-year return is sitting at 98.07%. You can see the kind of roller coaster that this company was on. Now, in November of 2021, Amazon was trading at $176 per share, and fast forward right about a year towards the end of October when I purchased the company, it was sitting at $100 per share, so it had gone down a lot in price during that time. Now, taking a look at the bottom here, we can see that it approached $80 per share, and I'm not quite sure if it hit it, but it was definitely very close to that price target, and that would have been about a $20 discount to what I bought the shares at, so I definitely should have purchased just a couple more shares as the price was going down. Since then, the company has skyrocketed up much higher, sitting at $200 per share. And if you look at their 10-year time frame, they're up 1,000%, and that's without any dividends reinvested at all. Everything just gets reinvested back in the company, and they do a very good job investing their own money into their capex. Taking a look at their valuation metrics, their price to earnings ratio for the trailing 12 months is sitting at 55.84, and their forward-looking price to earnings ratio is sitting at 43.78, so higher than the rest of the companies we saw today, but not terrible at all. And if we compare that to the 5-year average, it is a big discount to what it was trading at before. But something to keep in mind with Amazon is that it's very hard to properly value the company because of how much they put back into R&D and capex. Because of that, a lot of investors don't actually look at their price to earnings ratio and rather just look at their growth prospects and their growth rate in terms of both revenue growth and the cash flows that they're generating as a company. Their year-over-year revenue growth was 12.54%, which is great for such a big company, and their forward-looking revenue growth is expected to be 11.38%, which is also very strong. Now, comparing to the 5-year average, we can see that's a pretty big decrease from them, but that's because there was a lot of extra spending that was done during COVID era, basically. So a lot of these companies profited a lot during COVID and had to kind of adjust afterwards, but I think Amazon's on the right track once again. In terms of profitability, it's going to be a little bit lower than some other software companies because they also operate a lot of warehouses, so it takes a lot more investments into the company, but their gross profit margins are still sitting at 47.59%. Now, before I do go ahead and end this video, I just want to chart out their growth and their price to earnings ratio against each other and against the S&P 500. So in terms of growth, Google is actually number one in the year-to-date period, definitely defeating the S&P 500. Actually, all of them are. In the past 1 year, we can see a very similar image. In this case, Google is also beating out everybody by just a little bit, with the S&P 500 trailing behind by a decent margin. Now, on the 3-year time frame, Amazon actually does come in last, only up 7.46%, and that's because of that big dip that we saw earlier. It was a much more drastic dip than the rest of the company's experience, and because of that, Microsoft comes out on top. Lastly, for the past 5 years, Microsoft just barely squeaks out the win against Google, followed by Amazon, and then the S&P 500. Now, this is in terms of price return, so let's now graph real quick the total return of these companies. So in terms of total return, we can see that the winner is still the same. Microsoft is up top, and just to remind you guys, total return means dividends reinvested back into the company. So Microsoft is actually up as number one once again, but in this case, it's up 254%, so a little bit more than before, and then Google's up 235%, and then Amazon should be unchanged because it doesn't pay a dividend, so it wouldn't matter at all. Now, for graphing the price to earnings ratio, I can't graph it versus the S&P 500 on Seeking Alpha, but we can see that Amazon is the highest price to earnings ratio right now, followed by Microsoft and then Google. So Google is trading at the lowest valuation, technically speaking. And then if we look at the past 3 years, we can see that the one with the most discount right now is Amazon. But like I said, it's very hard to actually compare valuations for Amazon because of how the company does function. So what I think we could do is we could take Amazon off this graph and take a closer look at both Google and Microsoft. So now taking a look at Google and Microsoft, it's much easier to see. We can see that they're both trading at basically not record high valuations, but definitely higher than a lot of their other periods during the past 3 years. Now, widening the time frame to the past 5 years, we can see that Google is trading at a slight discount compared to what it was trading at in 2020 based on price to earnings ratio, but Microsoft is actually basically trading at the highest it's ever traded at least in the past 5 years. Just to zoom into where I bought the company, I bought it in late 2022, so around September, October, and November. And at that time, Microsoft was trading at about a 24.6 price to earnings ratio, and Google is trading at a 19.4 price to earnings ratio, with both of them getting almost as low as 17 for Google and 23 for Microsoft. So they were definitely a steal during this time. Now, valuation does not mean everything, and just because something seems overvalued based on the price to earnings ratio does not mean it's going to go down in price, and just because something seems undervalued based on the price to earnings ratio does not mean it's going to go up in price. So make sure to do your due diligence when deciding your stock picks. As always, that does bring us to the end of today's video. I really hope you guys enjoyed this video and got something out of it, and if you did, definitely leave a like and subscribe to the channel if you haven't already. I post weekly investing content. Don't forget to let me know down below which of your holdings is your best in terms of total return. I'm very interested in finding out what kind of stuff you guys invest in and what's been successful for you. If you haven't yet checked out last week's video where I talk about my dividend income for the month of June, definitely check it out right here. And if you want to see the most recent milestone that I hit on my portfolio, check out this video right here. Other than that, I want to thank you guys for watching this video, and I will see you next week.